Hello, everybody. My name's Tom Coyle. One of my passions is using data to make decisions that are emotionally charged. Today, we're going to talk about Nike. Now, on Labor Day weekend, that was Monday, September 3rd, it was announced that Nike made Colin Kaepernick the spokesperson for the new ad campaign, which is believe in something even if you sacrifice everything. And of course, there was all kinds of buzz on social media, some of it good, some of it was bad. So I knew that when the market opened on Tuesday, September 4th, I was going to do something with Nike stock. Was I going to buy it or was I going to short it? Well, that's what we're going to talk about here. So before I buy or sell any stock, I don't worry about emotion. Something like Nike signing Colin Kaepernick, whether I support him or don't support him, is not going to sway my decision to buy or short the stock. I'm going to buy or short stock, or maybe even do nothing if the indicators aren't there, based on what the data is telling me about the market. So my first thing is, what am I going to do? Where's my initial bias? And can I find a confirmation of that bias? So the first thing I do is look at the global news. What is going on globally that might affect the markets? Some of the things that have caused market dips this year have been talks of trade war. Well, so far that's kind of died down. So that obstacle is not in the picture, at least right now. Next thing I want to look at is what are the broad markets. Now look at this chart. This is the ES. The ES are the S&P 500 futures. So if you look at the long-term chart, we are still in a bull market. The ES has retreated a little bit, but that's how stock market works. It never is just a straight upward move. It's always, it kind of goes like this. It goes up, plateaus, up, plateaus, up, plateaus. But the overall trend is still moving up, even though it's, it's retreating a little bit. The market was having a breather according to the ES. So I kind of have a bullish bias. So now let's look at the specific stock, Nike. Now take a look at this chart I have. Now first off, if you look at this chart, it's a little busy. Bear with me for a minute. This is Nike's chart. Now as you see the circle was where the stock was. That's where the stock is at market open on September 4th. And I'll go into that a little bit. Now, one thing I want to show too, looking at the chart, and give me a second. I'm going to pull up my chart so I can navigate this with you. So when you look at this chart, so kind of with the chart there, where I've got that red line across, that's what I call support. So 79, the stock price of 79 was a support point. So obviously, before the market even opened, I looked at where, if you look at where the beginning of that red arrow is, when the last time the stock reached a high, which is the first blue arrow on the left. The first blue arrow on the left is when the stock reached a high. As you can see, it retreated a bit. And that's very common with stocks. Stocks hit a high, retreat a little bit, go up to during a bull market, it retreats, goes back to a new high, retreats a little bit, goes up to another high. So what's going to happen here? That's what I'm looking at. So now, when you see the beginning of that red arrow, that was the low point. It touched 79 and then bounced back up, established a high of 83.68. That's your second blue arrow, just to the right of the first one. That's where we had a high. And even before that circle, we see where you see the circle, even before that circle, the stock was already retreating a bit after having reached a new high, like stocks tend to do. So now I'm looking at what's going to happen on Tuesday. Now, to understand candles, if you don't understand stock candles, red candles mean the stock finished down for the day, in the sense that what makes it a red candle is that the market closed lower than where it opened. A green candle means the stock it opened lower than it closed. So the close was higher for a green candle and the close was lower for a red candle. Now that does not mean the stock was up or down for the day, and I'll go into that in a little bit. So now, as you can see here from that circled green candle, Nike stock, this is Tuesday. And what I did is I was on a 1-minute chart. And what I was looking at is that line of support, 79. So my hypothesis is if the stock touched 79 and bounced off of it, I was going to be a buyer of Nike. If it hit 79 and kept and had two 1-minute candles close below 79, I was going to short Nike, because then the stock would have gone down to at least 76 or lower. Now, because it's a bull market, my short play would have been a very, very short-term play. I would have shorted maybe for a couple days or a week at most and got out of the position. So anyway, I'm looking at my 1 minute chart. And by the way, the chart I'm having here, this is a daily chart. So there's different charts. So this chart reflects where the stock did each day. You get a similar looking chart if you pull up a 1 minute or a 5 minute or even a 1 hour chart. So when I'm trading during the day, I switch to the 1 minute chart while keeping a daily chart to help evaluate the longer term trend on my right screen. So my left screen is the 1 minute chart. So sure enough, it touched 79, bounced up, I bought the stock. Now, if you did not own Nike, let's look at the next few days here. If you look at the candles to the right, particularly the next 3 candles following the circled one, not the one that jumped up where the diamonds around it, but those next three candles following the one I circled. If you bought Nike at the market open or somewhere near that point or near that 79 point on Tuesday, you would have had 3 more days of gains. And on your 4th day, you actually had, it was gaining for a bit. As you can see the candle, as you look at the whole length of a candle, that just shows you the range where the stock hit. But the stock hit that point. So on that 4th day, Friday, the stock actually was making gains for the day and retreated. But again, let's go back to the ES chart really quick. First off, just the obvious thing, each day last week, the ES was going down, whereas Nike for 3 days, actually went up. And on that 4th day on Friday, it was a green candle, but it retreated, and that's because the broader market helped drag the stock down. So the fact that Nike did what it did for those 4 days in light of what the broader markets were doing says a lot about the stock. It means that Nike that's an indicator that Nike's a strong stock. So then what happened on Monday? Well, Monday, the following Monday, this would be the 9th, or sorry, September 10th rather, that's where I have the diamond around the stock. So as you can see there, what you have is you've pretty much erased the gains. So basically the big thing is now if you were holding Nike the Friday before Labor Day, by the following Friday, you were still in the hole, at least, I mean, in a slight loss as compared to Friday. Your overall position was probably good because you probably were holding Nike long before that. But what happened is, in terms of you still had not erased the gains you lost from the week. However, what happened here is on, but you pretty much, when it closed, we see the diamond there, you're pretty much back to where you started the Friday before. So if you're someone who held the stock prior to Labor Day, any losses you took, you've recovered. And now, let's look at this next chart just to give you let's go to this next chart here. Now, this one's a little busier. But what you can see is I've got the 3 lines. The red line, that's that support line I was showing you with that around the 79 mark. That's the red line. The next line up is a blue line. And what you see from the stock there is you see support. See where if you look to the left, the full length of the arrow there, you'll see where the candles have kind of touched on that line. That's new support, which means what happens is that's like what you're looking for. Support means that's what's holding the stock price up. So as it touches these arrows, it's not penetrating below. Now you had a brief penetration below that support because of the Nike news, but now we're back above that support. So you look at it, you've got those 3 key points, well, actually technically 4, those 2 candles right next to each other. But you've got in the left, the middle, and the right, you've got that key support holding just about the 81 mark. But the next thing I want to talk about is resistance. Resistance is sort of that barrier to a stock going beyond that level. And as you can see, that final red candle to the right of your screen, this was the result of Tuesday, September 11th. And what you see here is it touched just shy of that 83.68, the high that was made a few weeks ago. And then it retreated down. Now, as I said, it's a red candle because it closed below where it opened. But it's still a gain for the day because the close was higher than the previous day's close. So even though it's a red candle, it's still a gain for the day is what happened Tuesday. So what's going to happen today? I don't know. So as Nike moves forward, and today is September 12th. So what's going to happen? What I'm watching for is this resistance. I'll be on the 1 minute chart looking for those 1 minute candles to see if it penetrates that resistance. Now, it's also very important I close with this. It depends on where you are. If you are a short-term trader, I'm more worried about this resistance than if I'm a long-term trader. I say that because typically what Nike does this time of year is it goes on a tear from just after Labor Day weekend all the way through the holidays. Sales, people, Thanksgiving, Black Friday, all that kind of thing. So if you just want to put your money in something and you're going to sit on it for a while, Nike is clearly a buy based on what the data is showing. If you're a shorter term trader, i.e., you're just trying to make some money by the end of the week, I'd be paying very close attention to that resistance, because I could see this being range bound between the top blue arrow and the bottom green arrow as its stock is range bound before something takes the stock beyond that point. What's going to do it? Well, I think it's going to break through because I'm going to enclose a few news articles here. Just briefly looking at these articles. First off, this one report showing that Nike has increased its sales 31% since the ad campaign. There's another article. These guys, these analysts, they were analyzing boycotts of stock based on things that happened, like in various issues. They looked at Starbucks, they looked at JCPenney's, they looked at some other companies where people threatened to boycott something because they didn't like something going on. And what they've shown is that the boycott, other than maybe the initial day of the news event or whatever, the boycott really did nothing to affect the stock if the stock was tied to a good company. Now, JCPenney, what the article talks about, is that took a hit, and I think that people were boycotting. Conservatives threatened to boycott. I think it was Ellen DeGeneres was going to be a spokesperson, that type of thing. And yeah, it went down right around the time of the boycott, but the boycott was not causal. JCPenney was already a bad stock. Retail sales companies in general have not been doing well at all. So the overall market trend for that sector was already down. So it wasn't that the boycott affected it. In fact, you'll find that most boycotts and things like that, they quickly get priced into the stock. So they don't really drive what's going to happen. So all this stuff about Nike, as this article is saying, doesn't really affect it. And this last article shows that analysts are starting to raise their price target. Now, again, these folks who are these analysts, they don't do this based on emotion. They're looking at all these things. And yes, they're looking closely at this ad campaign with Nike to see if it affects it negatively or positively. They don't go there with emotion saying, oh my God, Colin Kaepernick and Nike are doing this, therefore the stock must go up or it must go down. No, they look at all the factors, and including the factors I outlined. What are the broader markets doing? What's going on with the company? What's going on with the stock? And what's going on worldwide? All these things come together to evaluate it. So in summary, if you are a long-term holder of stock, Nike is a good buy right now. And if you are a short-term trader, you want to pay attention to that resistance. Just see where you are, because that depends on when you need the money. If this is something you're trying to make some money between now and Friday, I'd be looking very closely at that resistance. I'd be very careful looking at that support, that first blue line and that second blue line in this chart I showed you here. So anyway, that's it. Oh, entry point. If you're not in Nike yet, what I'd be doing is watching those two blue lines. If it gets down to the first blue line there on that chart, that's a great buying opportunity. Likewise, if it breaks out of that blue line, i.e. you see a gap open today, a gap open means when the stock gaps high, so let's say the close was like $83.68. Well, a gap open means it opens at 88. It just jumped a few points on its open. What I'm looking for is the stock penetrating and holding above that resistance. If it holds above that resistance, that means that stock is going to go on a big run. So those are some two entry points to look for if you don't own Nike yet. If you did what I did and bought on Labor Day weekend, you're in the green right now. You're doing very well for yourself. Or in the black, I guess is what they say in the finance terms. You're doing well. And if you were holding stock before the whole news came out, you've already made your money back. Any losses you made have been canceled out. And if you're not in, either look for that blue line to buy, the first blue line, because we'll go back up, it's range bound, or look for a breakout above that resistance. Thanks for watching. As always, send me your questions if you have concerns, and if you like this, send me a message. I'd love to do more videos about this and using data to help navigate an emotional decision such as buying a stock. Thanks for watching.